We don't usually pay this much attention to labor market revisions. And obviously, the labor market has been a key catalyst for the equities market when we think about the market rout that was caused by a variety of things, but in particular, a soft jobs print. Why do you think that we are so confused about the state of the labor market right now? Is it that we don't have good data, or is it that things are changing too quickly?
Well, I think the data is fine. I mean, if we think about today's number, all we're really doing is benchmarking the information we've got for the last 3 quarters of 2023 and Q1 of this year to much more comprehensive data that gives us a much better picture of what was going on. Let's not forget the monthly jobs number is a survey-based estimate. Now, it's extremely accurate for the most part, but when things are changing, when the economy is heating up or when it's cooling off a little bit, it can overestimate or underestimate the way things are going. So this count is really telling us what the tally was for what the more sort of authoritative tally was for the 12 months up to March 2024. But, as was just said, I think the Fed cares much more about what just happened, which is that the unemployment rate has moved up to 4.3%. Don't forget their year-end estimate was 4%, so we've already shot north of that. And history tells us that we need to be more concerned when the rate is rising because it doesn't necessarily just stop after going up 5/10 or 6/10. It can keep moving. So they're going to be much more concerned about that. I think the data is good. But again, we've got claims that are very, very low historically. Continuing claims have crept up a bit. It's more that the unemployment rate has been rising, and we're not quite sure whether that is more to do with this influx of immigrants that's sort of looking for work. But we do know that it is taking people longer to find work, and that the labor market has softened. This is really just sort of telling us was the economy adding 240,000 jobs over the last year into March? Or were we adding something more like 160, 170? So it just sort of gives us a better perspective going into what we already know has happened this year.
Marco, real quick, let's talk about ultimately what this all means for Powell on Friday, but also just what you think the signal is going to be. Very much markets are expecting a dovish signal here from Powell on Friday. How likely are we to get that? And I guess, what do you think makes the most sense in terms of the path forward for the Fed up until this point?
We think that, when it comes to Friday, which is definitely the biggest event of the week, Powell will try to send a calming message. I think that the Fed got a glimpse of what a disordered market reaction to recession fears would be earlier this month. So they will tread very carefully looking forward. I think that Powell will deliver the message that the Fed is sufficiently confident that inflation is heading back to 2%, which will allow them to cut rates soon, which soon means September. And it will explain, the framework that will underpin the coming easing cycle. Powell will probably not talk specifically about 25 or versus 50, but it will clarify that, if August unemployment report is better than July, which we think is the big case now, they will go with a string of 25 basis point cuts for the rest of 24. But it will also communicate that they're open to 50, especially if the August employment report sends signals that are consistent with July. So bottom line, the Fed will deliver the message that they don't want to fall behind the curve, and they're committed to deliver the soft landing. If this means cutting, by 50 basis points in September and November, they will definitely do it.